What's going on, everyone? Hope you're doing well. Today's October 23rd, and I don't know if you've heard about this, but there's an election coming up in a few weeks, or not even, in like 10 days. And everyone's asking what is going to happen to mortgage rates after the election. Well, that's what we're going to talk about today. Do I know exactly what's going to happen? Of course not, but I have a pretty educated guess I'm going to make. So let's make a guess and let's see if I'm right. We're going to jump straight into the data and I'll show you. But before we jump in, the first thing I want you to remember as I make my prediction is the Federal Reserve has been acting as a backstop for mortgage bonds since March, since shelter in place, since the market went absolutely insane over coronavirus. Now, it was horrible at first. Well, let's just look at it. All right, folks, so here we are. We're looking at mortgage-backed securities, and we're looking back 6 months. Now, the first thing I want you to see here is it's been pretty flat. It looks like this was a horrible day, but do you see this little red dot or red arrow right here? There was a rollover. So really this chart should be probably closer to this level. So it's been very flat. If we look at just the last 3 months, it's super flat. The rates have not really moved much. Now, you know, from October 1st through today, the 23rd, the last 3 weeks, yes, rates have gotten a tiny bit worse, a tiny bit. But we've had very small changes since the Federal Reserve stepped in. Now, let's go back so I can give you a reminder of what things looked like when shelter-in-place coronavirus first started. Here we are. Look at this volatility we saw back here. Here's March 5th. This day, March 19th, was the worst day I've ever seen in 20 years. The market moved by 400 basis points in one day. Look how flat we are, right? Everything's been calm, cool, and collected. Now, what's important to remember is the stock market has been moving for the better over this time. Mortgage rates have stayed flat, but the market has improved. Now, normally what we see is when the stock market goes up, rates go up. People move money from mortgage bonds, mortgage-backed securities, stable assets, to stocks. And then when the stock market gets scary, they move it back to something more stable. That's why we see things go up and down. So when the stock market goes down, typically rates go down. When the stock market goes up, rates go up. That's the basic way it works. Well, we haven't seen that. Let's look at what the stock market's done. Okay, so nothing special here. I'm just using MarketWatch to give you a quick gauge. Here we are. Remember, this is that volatility we were seeing. Remember on the chart it was all over the board. Well, rates went down because the stock market went down. And then the stock market has gone up over time. But rates have not. Rates have stayed low because the Federal Reserve is acting as a backstop and keeping them low. So what happens come November? Well, we have to remember what happened when Trump got elected in 2016. The market reacted very well to that. I'll show you. So let's look at the 10-year Treasury. The 10-year Treasury back in 2016, we were pretty low, right? Down in the 1.6, 1.7 range. October 31st, we're getting pretty close to that election. November 7th, look at this upward trend we have, right? The stock market went up. The 10-year Treasury also went up dramatically. Why? The market loved Trump's corporate tax plan. It reacted very well to that. This is not political. This is factual information. I don't care if you like Trump or not. I don't care if you like Biden or not. The market reacted well to Trump's tax plan. So here's my thoughts. What has Biden been saying he's going to do? He's going to repeal the Trump tax plan. Well, if the market reacted well to it being created and knowing it was coming, how would they react if they knew it was going away? My opinion is we would see the stock market go down, which means that rates should go down. But what we see back when Trump got elected, we saw rates go up 1% within like 3 weeks. Are we going to see movement like that in the opposite direction? No. Why? Because we're already there. The Federal Reserve moved rates down to help everyone out. Everybody in the country is basically refinancing or saving hundreds of dollars a month they can put into the economy. Houses are selling at higher prices than ever because the money to buy those houses is cheaper than ever. The Federal Reserve stepping in will keep things calmer, in my opinion. Now, will we see a little bit of a shift in one direction or the other, depending on who's elected? Possibly. But my guess is that we don't see too much movement at all. Because with everything that's happened with the stock market over the last 6 months, rates have stayed calm because we have that Federal Reserve as a backstop. I'm curious what you think. Comment below. Let me know what you think. I love talking about this stuff, obviously. Ask me any questions. If you have any concerns, let me know. But that's what I think. I think if Trump gets elected, we don't see too much change because we already know what it's going to look like. He's already there. and we have the Federal Reserve acting as a backstop. If Biden gets elected, he said he's going to repeal the Trump tax plan. Market's not going to like that as much, considering they liked it when it got rolled out. But we're not going to see the volatility we saw back in 2016 because the Federal Reserve is acting as a backstop. Thank you guys so much. I'll talk to you soon. Cheers.